Hello traders, Gary Wagner here. Sorry about being late, but it is 2:30 in Honolulu, 7:30 in New York. It is Thursday, November 21st, 2019, and this is the Daily Report for Gold and Silver. We have seen extreme volatility in the market. Today was no exception. If anything, we saw an increase in the volatility and downside pressure. We'll look at some charts in a second, but in essence, gold closed at around 1464.65. That's where it's currently trading at, and that is precisely where we entered our long trade. Let's take a look at pricing and also an updated perspective as to where we think the market could go. We are looking at gold pricing after the break. It is currently trading in Australia up about 60 cents, 60 to $1 higher after selling off pretty strongly in the New York morning session. And currently we are at 1464.20. We went long at 1464 for aggressive traders, up to about 1467 for conservative traders. The key is whether or not we've caused any kind of long-term substantial chart damage. And to briefly answer that question, we'll talk more about it, of course, when we look at our studies, is that the answer is no. Because what we are looking at is a key and critical level that comes in on this particular chart. We know it comes in at 1459. However, the low that was hit came in around the 23.6% retracement, and that, as I said, was 1466. We had platinum trading lower, palladium a little higher, silver a little lower, and the dollar fractionally stronger on the day. But let's take a look at our current studies and see how today's action reflects as to our future potential with our current gold trade. Now, as for our current take on the market itself, I am still firmly under the assumption and belief that the lows that we saw last Tuesday coming in at about 1446 should be the conclusion of a fourth wave, should be a conclusion of that current correction that really began up at around 1565 and then came down approximately $100. Now, considering that the market move itself was close to a $300 move from 1268 to 1560, $100 to $150 is definitely in alignment with what we would look to see in terms of a correction and the amount of value that it would lose. That being said, we have not challenged in any way, shape, or form these lows that have come in on Tuesday of last week. At the same time, we have seen a pretty rocky start, so to speak, but the market has moved higher. Today we did see a dip. There is no doubt about that. I certainly would like to see the market hold roughly in this area. I wouldn't want to see it really go much below 1460 because to me that would be a fairly bearish statement on a technical basis. But what we have to realize is that this market is fundamentally driven, and the fundamental events that are moving the market are really, I believe, simply the spin that is being put upon the current trade negotiations between the Chinese and the United States, and depending on which superpower is speaking, of course, is really determining what the flavor or tone of the statements that are coming out from those administrations. That being said, I do recommend that we maintain our current long position. We just moved our stop up yesterday. We'll look to maintain that and look to see if we can see some recovery. As I said, my first target comes in at around 1483. Above that is 1493, and then of course 1500. That is a key psychological level. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.